We want to take it away for Options Insight as we really start to approach that closing bell.
Just 40 minutes to go, so let's welcome in Christian Fromhertz. He is the CEO of Tribeca Trade Group. And Christian, I want to start with sort of the movement that we've seen in Fed rate hike expectations, because we got very close to pricing in a 100 basis point hike earlier in the week. Feels like we're backing off a little bit. What is that meaning for sort of risk assets in general and the options market?
Yeah, and it's great to be here. Yeah, I mean, it's been a pretty wild week in terms of, obviously highly expected CPI, PPI data. And, what's nice is with the markets, there's always something that you can kind of watch to tell you what's, how the market is pricing in. And specifically for the next Fed meeting on 7/27, yeah, we started to see almost a 70% odds right after the CPI data going into the PPI data that we were going to see 100 basis point rate increase. And that's backed off both by a combination of the data that came out with the PPI report and then the data that came out today from the University of Michigan, as well as the Fed speakers that have been kind of chiming in here and there about, whether or not they really need to do 100 basis points this time around. So yeah, it's been interesting to watch, and we've now gone down to about an 18% chance from a 70% chance.
An 18% chance. There's still a chance, but let's move from the macro data to some of the micro data, the company-specific data that we've gotten, because we are in the thick of big bank earnings. And if you look at the action today, I mean, banks really, really soaring. But I'm curious what the sort of activity in the options market has been like on the back of this rally. How much juice is behind it?
Well, yeah, it's a great question. And, I think it's the financials and the banks are one of those groups where there's been some pretty low expectations. And when you get one of those, when you get something that's positive, you could really see a move like we're seeing today. However, in the option market, specifically when you look at XLF, they don't seem to really be embracing this move. I think the put call ratio for the day is about 1.3. So there's actually a bit more puts going up today, perhaps fading a little bit of today's move, maybe also a little bit of hedging if people are still long a little bit of those individual banks.
Yeah, definitely something to watch, sort of that not quite embrace as we continue to roll into some of the bank earnings on Monday. But Christian, I know that you're also keeping your eye on healthcare in particular, and that you came prepared with a trade.
Yeah, and it's a different looking chart. When you look at healthcare, biotech has also been really strong over the last couple of weeks. But when you look at the managed care space, UNH just knocked the ball out of the park today. They had a great quarter, great guidance, and it's not just UNH in the space, but if you look at companies like Centene, Humana, Cigna, they're all uptrending and very close to breaking out. The trade that I do like, sticking with the trend here on UNH, is the August 550 calls, and you can get into them for about 760. We're also seeing some volume in the December 660 space, but I think that's a little bit ambitious. I like the August 550 calls.
All right, Christian, lot to keep an eye on. Really appreciate you breaking us down for us. That is Christian Fromhertz of Tribeca Trade Group joining us for Options Insight today. From New York, this is Bloomberg.